Hi, good morning, everyone. Welcome to our latest live video. I'm delighted to say I'm joined by Michael here. I'm going to get him to introduce himself in a second. But before I do that, as always with these sessions, if anyone wants to ask any questions as we go along, have any comments, please feel to put them in the box. We're on various social media channels today. So please do that. If you are watching it on demand as well, feel free to put the questions in, and I'm sure Michael will be happy to cover a later time. So, yeah, today we're talking about secure lending audits. Now, it's something maybe a lot of people haven't come across and don't really know what it is. So that's hopefully the point of today is kind of explain a little bit more about it. So,
yeah, fingers crossed.
Yeah. So, Michael, I'll hand it over to you. Do you want to just kind of introduce yourself, who you are, what you do to start with?
Yeah, sure. So my name's Michael May, and I'm the owner and founder of Secured Lending Auditing Limited. We've been running sort of properly for about 5 months, because we're in June now. So we've been running for 5 months now, getting a fair bit of traction, and yeah, hopefully we're gonna continue in a sort of forward direction.
All right, well, absolutely, yeah. So I guess a nice obvious question to start with, Michael, is what is a secured lending audit?
Right, so secured lending audit. So when you hear the word audit, a lot of people think about financial audits that accountants will perform, where they go through all your transactions and they make sure that everything's reported right and costs are apportioned appropriately and so on. And we kind of do exactly the same thing, but on a commercial loan or a mortgage. So but what we do is we take all the various bits of information that are on the standard agreement and any associated terms and conditions. Also, we take into account any communications between the lender and a borrower about the product. And then we look at the statements and we basically do a reconciliation between the two, and we'll make sure that what is on the statement, what has been paid and what has been charged and so on, is in line with what the borrower has signed up for. So we do that sort of very detailed analysis of all the documents, just to make sure that everything is as it should be and what the borrower has signed up for. So it is an audit. It can confuse people, so you can talk about it as a check or a review, just to make sure that everything is being run and applied to the mortgage or loan as it should be.
Yeah, that makes sense, because I think probably most people, you just kind of assume these things are right, don't you? I think it's fair to say.
Yeah, and we know what assumption is, don't we, unfortunately.
Oh, absolutely. Yeah. So why did you start the business then, Michael? Why did you kind of decide to go down this route?
Well, I've got a very sort of inquisitive mindset. I like to know how things work. So if I've got the capability and the time to be able to understand something and get a better handle of it, I like to do it. I love watching documentaries about the universe and the Big Bang and this, that, and the other, and quantum physics and black holes. And even though I kind of grasp it, I don't fully get it, but I really, really enjoy it, because it's just given me a bit of a taste into how those kind of things work, and that sort of permeates into my life as well. So if things like loans and mortgages, I always like to know what I'm going to be paying moving forward, so I can quite easily work out what it's going to cost me on a loan and a mortgage and so on. And it made me think a couple of years ago, it's a problem that has been around for a while with the banks, where they just don't always do it right. And some of that is down to human error. Human beings make mistakes. That's fair enough. It happens. Sometimes it's down to lack of infrastructure or bad systems, rubbish systems being implemented. And we've established that there is actually a bit of a problem out there. And when you start looking at the types of loans and mortgages that we can perform a review on in the commercial area, commercial lenders don't have to be regulated by the FCA. They're not obligated to. They may well already be for consumer finance, so that's me and you buying a house or getting a loan for a car, and they may well operate their commercial side and adhere to the FCA regulations. But pretty much anybody, if they can get a bit of money together, they can become a commercial lender. And they don't always do it right. And this is what led me to start the business. So where a business has been overcharged, whether it's £500 or £50,000, that money should not be in the lender's pocket. It should be back in the business's pocket, because it shouldn't have been charged. You know, if you went to fill your car up, or you went shopping and it says £100, and you go in and say actually it's £102.15. It's only £2.15, but it's not right, and you'd ask for it back. And this is what we're here to do. We're here to identify those overcharges. We can go to the lender and say, you've done this wrong, and it needs to be paid back.
No, that makes perfect sense. So what do you think the extent of the problem is? And I know it's impossible, I guess, to get an exact figure, but how big is the issue?
Well, you've hit the nail on the head. It's very difficult to establish because there's no data out there around the types or the volume or the value of errors that banks are making. We do see a lot of it on the consumer side, sort of current accounts and, like I said, personal loans and mortgages. Over the past sort of 10 years or so, there's been quite a lot in the papers and in the media about big banks, high street lenders, well-known banks that have overcharged their borrowers, and they have had to pay them money back. So looking at the commercial side of it, there's bound to be a problem there as well. And like I said before, because it's unregulated by the FCA, the commercial lending area, it's more likely that there is going to be errors there. And if we've seen it in a regulated area of lending, it's going to be happening in the unregulated area as well.
Absolutely, yeah. No, there's definitely an issue. Like I said, who knows what the problem is? I guess that'll come out in the fullness of time. But
absolutely, yeah.
So if someone has had or currently has a loan or a commercial mortgage for their business at the moment, what's the process for them involved with checking that they haven't overpaid?
Well, what we would need to do is just have a sort of a quick pre-qualification chat just to make sure there are well, I wouldn't call them criteria, but there's some exceptions with regards to more recent loans because of COVID. So your CBILS and your bounce back loans, they've only just started to kick in for the payments, and there's such a low interest rate. There's not going to be any issue there yet because there's been no interest charged. So it's more an existing non-coronavirus related loan, or one that's been paid off. And it is simply, all we need is 3 sets of documents. We need the original agreement, signed agreement, any associated T's and C's if there is any, and also all the statements. And those documents will give us all the information we need to provide a review. As a business, you'd like to think that the business has got copies of those documents, but if not, they can always request them from their lender, and via a letter of authority. That's something that we can do as well. But once they've landed, we can do an audit very quickly within 5 working days and give a result of it's very binary. They've either been overcharged or they've not been overcharged, and if they have, then if we're instructed, we'll go ahead and get that money back for them.
Brilliant. So it's a fairly simple process by the sound of from the business point of view. Yeah, just providing the documentation, and then it's up to you guys to do to look at from your expert eye. They don't. All they need to do is wait for the money to land, because we take on the legal aspect of it if it's required. So if a lender does challenge our claim, we've got a legal team that can help us with getting in touch with the lender to say, look, we do actually mean business. We're not just being a bit silly here, and we're not trying to prove unicorns exist. We've got 1 and 1 and it comes to 2. You've got 1 and 1 and it comes to 2.15. So we're right.
that might be a little bit arrogant, but at the end of the day, that is how it's working. Like I say, we're not trying to prove unicorns exist.
Oh, absolutely. And this next question is, I know there's no exact answer to this, but what are the potential returns that someone could get, or the issue? And I guess I know it depends on what the overcharging is, but if you've got a £200,000 commercial mortgage, for example, I guess even a slight error would result in quite a big return.
Yeah, well, I mean that's quite a good example. And what you've said, it can be. There's quite a lot of criteria that it can depend on. But our most recent case, it was for a bridging loan for a property developer that was supposed to be over 10 months. Because of COVID, it was extended to 15 months, and there were various fees and interest charges additional to what they'd signed up to because of that extension. Now, in total, our client borrowed, I think it was about £178,000 in total. Over 15 months, we got her over £8,000 back, where they just got it wrong, fundamentally got it wrong. And when I say that they made up some numbers, I'm not exaggerating. Some of the fees, they literally must have made them up because there was no resemblance to how the charge or some of the charges should have been applied. So, that might be, a £178,000 loan, getting £8,000 back. That's a huge amount. So, with £100,000 mortgage, again, dependent on how long it's been, if it was over 10, 15 years ago, you'd definitely be talking into the high four figures for even a 0.5% interest rate error. It could just, the way compounding interest works, it just builds and builds and builds. That very early period, I've got to do this the other way because I'm the other way around. So that graph will just go like that, and then suddenly it'll just shoot up because of compound interest. So it's difficult to say, but at the end of the day, if somebody's had a loan or a commercial loan or a mortgage, even if we get them £200 back, tonight out, it's paying for tires on the car. It's money that should be in their pocket and not in the lender's pocket. So it's nice to get those big wins, but it's kind of to us it doesn't really matter. I don't care whether it's £200 or £200,000. We'll get that money back for them.
Yeah, I guess obviously the nature of a bridging loan, and bridging loans are short term. So you mentioned there was 9 months, was it? Yeah. They're generally kind of a year at tops, aren't they? So if someone, again, the example I use of a commercial mortgage might be 15 years, I guess the potential returns on something like that could be even higher because the error would
definitely. I mean, we can go back to what we're into 20. So we can go back to sort of late 2006. For when a loan or a mortgage was paid off, we could review those. There are some caveats around that if we do find something, but because it costs nothing, if we find something and then we establish that for one of these reasons that we can pursue a claim, it doesn't cost the business anything. Until that money is landed in their account, it costs them nothing. So we will still do that review. Anything up to 6 years ago, we can absolutely make a claim for. So if a loan or a mortgage was paid off late 2015, and that had been running for 30 years, what's that? Going back to 1985. So if they made a mistake early doors on that, you could be talking a huge amount of money to be able to reclaim. And if you look at the 15-year rule as well, you could be going back to the early 80s, late 70s, and it'd be a bit more challenging to get the information. But again, once we've got it, we can do a review and potentially get a claim in.
Yeah, that's interesting. So obviously, I'm assuming you're talking to quite a lot of businesses at the moment and people who've had bad lending. What's the kind of feelings from them in terms of the potential experience that they had and the chance of getting some returns?
Well, I've been speaking to sort of people in the commercial finance area. And although there's not been yes, there is definitely an issue here. There's definitely well, do you know what? It would not surprise me. if there was an error. That's the sort of sentiment that I'm getting. And I mean, just looking at kind of two extremes for cases that we've looked at, I've just talked about the £8,000 for a very short-term bridging loan. We did find a fundamental error with one of the high street lenders on a commercial mortgage that was taken out in 2008. Now, the error that we found, it wasn't something that we would be able to pursue a claim for because it needed a forensic accountant to get involved. So we've referred that on, and that's one that will take a good few months to get to any kind of resolution. But from when I spoke to a solicitor about the potential issue, about the error that we found, the issue that we found, they suggested that they could be looking at a six-figure settlement or a six-figure claim at the very least. And this is from one of the high street lenders. For 10 years, they didn't notice this fundamental error. And there's an argument that the borrower should have seen the error, but some business owners, they're more business focused rather than finance focused. So yeah, potentially this guy could be claiming six figures back from a high street lender. So we've got an unregulated small commercial lender all the way up to one of the high street lenders, and you've got just a huge amount in between. So if we found those two, what's going on around here? So there's definitely something there. I'd be incredibly surprised if after 6 months we just didn't get anything else, because it does go on. We've seen it.
That makes sense. And I guess from your point of view, Michael, apart from obviously businesses who have had lending in the past or currently have it, who are good people for you to speak to? Obviously, you're mentioning maybe accountants there, commercial finance. Is there any other areas?
Yeah. So insolvency practitioners are a good one because if they've got a business rescue division, if we could, and they've got commercial lending or they've had commercial lending, if we could claw back some money for them and that saves that business, if it means 2 directors don't lose their houses and 10 employees don't have to go into unemployment, then that's absolutely fantastic. If a business has already gone insolvent, then we could act on behalf of the insolvency practitioner to just try and get some money back. So that that will help with creditors. And when it comes to insolvency, your unsecured creditors, your non-preferential creditors, they lose out. They might get twopence in the pound. So if we can get them 10 pence in the pound, again, it's not a huge amount, but it shouldn't be in the money. It shouldn't be in the bank's pocket. It should be with the business or the people in the business owe money too. So IPs are a really good one. Commercial lending brokers to a degree, but there's an element of reticence for them to get involved, which I understand. But anybody who's got a client base of businesses that utilise commercial funding, so businesses that have got clients like engineers or manufacturers, hospitality, because if they're not leasing or renting a property and they've bought it outright, or maybe have a loan for the commercial kitchen equipment, which isn't cheap. So it's that business that's got that audience of SMEs that may well have borrowed money at some point.
That makes sense. Thank you. And I guess finally, if people do want to find out a little bit more about what you're doing or contact you, where's the best places to do so?
Well, it's our website, and I'm not sure where is that going to be published somewhere or.
Yeah, I can put it out there. Yeah.
Yeah, so there's the website, and we can be contacted via the website. There's also my LinkedIn page and the LinkedIn business page. And there's a few bits and bobs that have gone out sort of PR-wise as well in the media. So I'm sure if anybody did a Google search of secured lending auditing, we'd pop up in a few places, and there might be something interesting for them to read there.
Absolutely perfect. That's great, Michael. Obviously, if anyone can't find you for whatever reason, you are listed on the Northern Affinity, so please do come to us, and we can point you in the right direction as well.
Yeah.
But I think it's really interesting the work you're doing, and I think there's a lot more to come from it as well. I would imagine in the coming months and years. Yeah,
hopefully, yeah, and being part of the Northern Affinity, any wins that we get, I'll certainly be letting you guys know, and yeah, we'll try and make that community bigger by getting everybody else involved with you as well.
That's amazing, Michael. So yeah, thank you for people for watching, and thank you so much for your time, Michael. It's really appreciated.
No, my pleasure.